Yeah, we can hear you sound and clear.
Okay. All right, so welcome everyone. Sorry, we had a network issue in the first section. We were not able to continue with what we were doing, but luckily I went over some stuff on the internet and I actually made some settings that even if my network is disturbing, the audio would still be nice. On today's Zoom, we're going to be discussing about some of the important stuff which we have learned along the way and how we could also use them in the markets together. Although in the previous sections, we have been learning them separately, but in this, we would learn them together, okay? And then try to see how efficient we can use that in the market, all right? So before that, I was explaining something about imbalance to one of the guys, and he made reference to something which I think it's a very important details as well, because a lot of people get that confused when it comes to imbalance. Imbalance for me has nothing to do with the candles, all right? If you're looking for a bearish or a bullish, I don't think they have a bearish or bullish imbalance. An imbalance is just an imbalance, you know. This is a gap in the market which actually has, have to be filled. This gap has to be filled, right? Is either this gap gets filled and price goes back up, or the gap gets filled and then price, goes back down. But whichever way it is, this is an attraction of the market to the market, and the market has to fill this gap. So imbalance are just gaps, manipulations, because tons of money were dropped around here, which pushes the price higher. So that caused a lot of manipulation in the market, which actually created this gap. So market doesn't really like this. After the target has been cleared out, be it maybe an external high, price returns back, to clear the imbalance within the range. Let's say this was the overall range. And, now the external high has been cleared out, price returns back to fill that imbalance, mitigating the supply or the demand zone below it, and then goes back up to clear this. And then returns back to fill the imbalance, which were left within this. And at the same time, clear out internal range lows. Okay, so what you have to understand is that once we are following structure and price has cleared out an external high, what we have to do is we want to look for the imbalance which is being left below this swing lows. Because what do we know? We know these swing lows are internal lows now because an external high has been cleared out. So if price is going to be reacting, price would react within the imbalance or the supply zone below the imbalance, which are resting just below those swing lows. So it's either this is going to happen or price would go lower to clear out this, mitigating something within this POI, either filling the imbalance 100% or maybe halfway. But I always trade from the demand zone below the imbalance instead of trying to guess, what price will be doing when price gets into this POI and then try to ride back up. So I always wait for this and then, not this. Okay, so that's what it is about imbalance here. So anyone else got any other question before we go back to what we're doing in?
Yes, King.
Hi, Jay.
Yeah, bro.
Can you hear me? Yeah,
Yep.
that's one question I asked before on the previous Zoom.
Sorry, can you go on again?
I said I asked a question based on the entry on the using FU candle on 1 minute. So you said that I should remind you.
Yes, that's what we're going to be going into. That's what we know. We were discussing about FU candles, and I was showing you guys how to actually pick an FU candle or what an FU candle actually is. So we will get to that. All right, that's actually what we're going to study next, right now, like right now. So before we
after this one.
Okay, so let me just go over this, then we would talk about that. Okay. So now going to, let's say the FU candle, which we know is a stop point, right? The stop points, the FU candle is the candle which did the stop point at the lower time frame, right? So now let's say we were coming for this from this range. Okay, so let's say we had this. This is not a replay mode, but then it still counts because it's the same price action repeats itself over and over again, so there's no difference. So wait. All right, so understanding, we'll see discounts. We want to look for something within discounts. We see an obvious order block, which I told you guys, always liquidity. Obvious order block, always liquidity. Expect a stop once, which is like an FU candle of the obvious order block, because there are a lot of stop losses which will be placed below this low. And you can see it's an internal low and also a swing low. You see on the lower time frame structure of this, you would see, the tiny structure, and this is like a swing low. So the POI below this becomes a significant point as well, which we have to observe, right? So what do we have as a POI? We have this guy over here, right? The hidden base, which is resting just around here, right? Which you can see also the imbalance can be used as a confluence to know it's an important zone as well. And after that, we have the extreme. I told you guys about the extreme. Yeah. So we could say refine to this. Okay, and then these are the two possible POIs which we would have picked. And then now we see price come into this POI. Let's say the 5-minute time frame. Hopefully we can see the price action. Okay. All right, what happens here? Now you see this reaction happening here. Now this low is going to get stopped out, right? So what is happening here is actually liquidity being built. You know that, right? This is an inducement. So since this is an inducement and this is an obvious order block, this is eventually going to get stopped out. So this particular stuff will get FU. You get what I'm talking about, right? This is going to get FU, which is going to be a fast reaction, which clears out the liquidity. What I told you guys earlier is this. Now, when you're observing an FU candle, which came in here, the next two candles has to clear out a swing high or engulf the previous two candles, right? And now on the 5-minute time frame, this is obviously not an FU of the 5-minute time frame. This is because we're seeing more of the structures over here. But if we go to the 30-minute time frame, we would see that that was a single reaction. You see, just a single wick into that POI, and then price went back up immediately. Now the next two candles did go above this and this, right? Then we retraced back down. Let's see on the 15-minute time frame. What do we have? Same thing, wick. The next two candles engulfed this guy, all right? And then they went above this high. Then on the 5-minute time frame, we see that. So you see this is an FU, right? You guys get what I mean now. This is an FU. You see, it fucked everyone up because a lot of traders were in this particular trade. So it went down real fast, took out their stop losses and then returned back immediately. This is an FU. If you go to the 1 hour time frame, you will see it's going to be a single wick. You see? The rejection engulfed, closed above the liquidity. So see, this is an FU candle, and on the lower time frame, this is what it looks like. So that's an FU candle of the 1-minute time frame if you want to use a single candle. But on the 5-minute time frame, you're going to be seeing a full structure like this, something like this, because you're going to be seeing the low, which the FU candle actually stopped out. FU candle always comes like this. Right, so it's going to be liquidity. And then, you pay attention to from the 50% of this particular guy, we did the manipulation. So price is going to be doing something like this. All right, so, but on the higher time frame, it's going to be a single candle. Now, using FU candle on the higher time frame is more like trying to take an aggressive trade from the wick which cleared that liquidity. Now, if you were coming from the 1-minute time frame, the 1 hour time frame, let's say I was busy and I wanted to trade this FU candle. What I would have done is I would take price from here, and then I'll place my entry at the 50% of this, maybe my limits, place my limit at the 50% of this, and then my stop loss at not this low, definitely not there, but would be at this particular point. This is going to be an aggressive entry, trying to trade. This is trading from an FU candle, right? And then your first target would be where? The external high, which might be this, or you might pick this. Now, depending on where you want to trade from or what your overall target is, or your buyers on the market is right now. But this is aggressive trading from an FU candle. This is what they mean. This is what is called an aggressive trading from an FU candle. Now, looking at this from the lower time frame, let's say we had time. We know this is an FU candle. So you see, trading from an FU candle doesn't really mean it has to be from the week. When it's from the when it's from the higher time frame, on the lower time frame is definitely going to be a structure. Right? But what you want to see within that structure is that that structure does what other manipulation still do. That's why I told you guys there's nothing special about an FU candle. It's just like a stop point, but the candle in particular, which did the stop point. So on the lower time frame, what you mark is this particular candle, the last candle which came back down. You know, not the full body anymore. You see, on the higher time frame, we did a mark from the full body, which came back down, which took out the liquidity, and then went back up. Then we placed our entry at the 50% of that, right? But on the lower time frame now, what we'll do is that we will pay attention to just this last candle, right? Just this last candle. Some might refer to this. Okay, but depending on the time frame you're coming from, right? Depending on the time frame you're coming from. If it's on the 1 minute time frame, definitely would be within this. If it was on the 5 minute time frame, definitely I will pick this because you can see this is like an order block on this particular time frame. And then the little confluence which we have is this liquidity, which is being built right here. Right, so if we really want to use our normal structure, you can see there's no much difference from that. We see price took out a swing high, created liquidity, and then broke structure. And as you can see on the 5 minute time frame, it looks similar to what we do, right? Now let me show you attention. Pay attention here. Now you see when price came into our POI, what do we see? We see the build a little with support right here, right? So if we wanted to take a more aggressive entry, I don't really do that aggressive entry that much. I would have just placed my entry here. I do take from 20 pips stop losses. As you all know, I don't do those stuffs that guys do. I could have, you know, if I was busy, would have easily placed my entry here. How many pips is that? 17, 12 pips, right? Or I would have placed at the 50% of this because this is the FU candle on this particular time frame now, right? This guy was the candle who took liquidity out and then went back up. I would have easily placed on this particular spots. But then let me show you something you would do when you're coming from the 1 minute. As you all know, these days I do take trades on the 1 minute time frame, and that would have been doing something like this, either like this or like this. But either way, I'm going to be showing you why I would actually be refining down to that particular point. Now, as you can see, pay attention back to this place. You see this resistance which was being built right here. If you go to the 1 minute time frame, and this is only when, try to use this concept when you're online, all right? Try to use this concept when you're online, because this is a more aggressive way of trading and price has to react to it really fast from your POI. Because if it doesn't react that fast, like I said, then there's something wrong. Remember that, okay? So what do we see from here? Price came into a POI. Pay attention so nobody confuses you anymore with FU candles and anything like that. Because as you can see there are so many structures within this, and we would have taken a lot of trade just from here alone. Because if you ask me, this is already a really clean pips, and if I was trading from the 1 minute time frame, I would have even cleared something from here, which is this liquidity. Trade at this highs, and then there, this. I would have cleared something from here, maybe from here. With my stop loss right here. And then maybe target something around this highs, you see? And then this guy will be my obstacle. Then I do something like this. You see that, right? And then same way, we would have easily gotten another trade from here. But then maybe stop that by this FU candle. Now, which is where I was originally going to. I just wanted to show you that you being confused by how FU candle works could really make you lose a lot of pips. So this is a concept you have to use when you're online, all right? And when you're trying to scalp, mostly, maybe let me say, or just based on entries, you know, just based on entries, not for direction, not any of those stuff, just for your entries, okay? Now, as you can see, they were building up some kind of like support over here, which a lot of traders would actually be looking at this also. Now, same way you're also looking for trades, same way traders are also looking at this. So support and resistance traders would also be seeing a support here and a resistance here. Now, but what I would actually be looking for is like, if I could easily see something like a Y curve coming from this particular point. Now, I wanted to break a news to you guys, but I wanted us to be done with SMC, you know, to make sure that you all pay attention to how SMC works and don't put your attention over there. But after this, in November, the Zoom sections we're going to be having every weekend will be based on just Y curve, all right? I will be teaching you guys how to actually use Y curve. But I wanted you guys to pay attention to how to use SMC so you will not get too hyped or decide to pay attention to just Wyckoff, because my Wyckoff works with my SMC. As you can see, I'm mentioning Wyckoff right now, but I'm actually doing SMC. So I don't use Wyckoff separately. I actually use SMC and Wyckoff and teach you how to actually use Wyckoff on your SMC. Okay. So now you can see there's kind of like a support here and a resistance. And then if we decide to use the schematic, we would see something like a selling climax here. ST, AR, PS, and SOS, because it went above the supply zone. This the resistance zone, which is like an SOS, yep. And ST in phase B. You see, so this is like a spring. So we're expecting a stop point. You see, just like the FU candle, nothing special. Now we're expecting a stop point. Like I told you guys in the other section before, earlier, I told you FU candles are no different from stop points. Just that is that particular candle which is below, your POY, the particular candle which is actually below the resistance. That last candle, which was the one which did the manipulation, is the FU candle. This is your FU candle, and if you wanted to trade from this particular time frame, just do something like this, and then place your entry here. You can see the weak rejection, and it stayed above the entry. Now, more confluence. What do you see? Liquidity. You see? Break of structure. So you see, none of this knowledge is a waste, and no one is more important. They are all very, very important and could help you out a lot. Imbalance. So this guy is liquidity, definitely. If you hold the imbalance but fail to clear out this high, you see, so this guy is liquidity, and then this is liquidity being built right here, inducing this big boy. And then what do you see next? The rejection. You could have easily gotten an entry from here if you wanted an extra confirmation like this, or you would have gotten an entry from here if you did something like this. And then you could still easily do something like this as well. There's no difference. So if you see the liquidity, mark it out. There's no difference. It's just going to help you understand more that all these things works together. There's no difference. Anyone telling you, I only trade FU candle, I just, wait for the FU to form, and then I take my trade from there. Bro, he's literally doing the same thing as you are. And if you decide to take a trade from an FU candle alone, you're on your own. I don't do that. So I won't teach you to do that, please. Okay, I see that as risky. Okay, let me see now. What if you see a liquidity being formed, and then you get an FU candle, which clears that liquidity? Don't forget, this still broke structure. Okay, and then the FU candle goes back up and fails to engulf this guy. And you tell me you place your entry here and you get stopped at, then you say he taught you something that doesn't really work. Bro, take the confluence. If you see it, take it. If you see the break of structure, you mark it out. Yes, it's an FU candle. And then you still know it's an FU candle. Place your entry at the 50% of the FU candle and take your trade from there. But that doesn't mean that you should throw every other knowledge you have away just because you want to take a trade from an FU candle. Be guided. Don't confuse yourself, please. Don't confuse yourself. These things are just confluence you add into your strategy. People pay attention too much to one particular thing, and then they lose guard the remaining stuff and end up failing in this whole stuff because they paid attention to just one thing. Okay, what if you paid attention to just this? This is an FU candle, right? But did it break structure? No. It cleared out liquidity, yes. You can see liquidity was being formed here. This guy broke structure. And then this guy did the manipulation and went back up. Did engulf this guy. But did it break structure? Did this break structure? No. You get what I'm trying to say? This is also an FU candle right here. You see, it cleared liquidity from this point, mitigated this zone. And then you can see it did engulf this particular point. Then you pay attention to the 50% of the candle which did the manipulation. This guy. Are you seeing this? This is me trading from an FU candle. This is me trading from an FU candle. If I did say I delete all this, and then I point out something like this, and I put my entry from here, and I draw my stuff like this, maybe targeting this external low, something like this, and then this is just you wanting to be deceived, actually. This is just you wanting to be deceived. You just want to let them deceive you, telling you that they have something new you want to learn or something special about what they do. But there's no difference. And I tell you that I did something like this, and I say, Mentorship Volume 2, come and learn how to actually trade the 1 minute time frame from just an FU candle. And you will pay in your money trying to learn how to actually do this stuff. Unknowingly to you is actually the same thing you're actually doing previously. But just because you're anxious and you don't believe that you know it all now, and you can actually improve yourself from practice, you just believe that there's something you're missing, and then you will come and pay me new money because you see 2 lines and then, my entry. But then if you pay attention to the surrounding of the price action, you see that this engulfed this is liquidity, this is a demand zone. And I just took an entry from the confirmation, which is because this is an FU candle. So nobody uses the FU candle special from this. This is how they use an FU candle. This is the safest way you can use an FU candle. If you want to use an FU candle after it clears liquidity without waiting for any other confirmation, it's fine. You can do that. Okay. But you're on your own. That's not what I taught you. Are we cleared on this? Can I continue with, with the explanation from this point?
Yeah, you can.
Okay, back to this. So I articulate everything. So please, anybody who is telling you he trades just entry from FU candle, bro, don't be deceived. Don't let all this stuff, itty bitty stuff deceive you. Tell him you trade from liquidity zone. Finish. You're making money and that's all that matters. It doesn't matter if you're trading from FU, imbalance, or whichever stuff they want to call it. But don't let anybody deceive you. Look for what you're supposed to look for and trade from it. Don't deceive yourself. As long as you're making money, it's working for you. Okay? So I can't really remember the points we were earlier.